Hello and welcome to Financial Intelligence. In this video, I want to discuss how Wall Street steals money from your ETFs without you noticing it. ETFs provide a wonderful way to diversify your portfolio. However, Wall Street has found ways to defraud ETF investors on a regular basis. Most folks only consider expense ratios or management fees of ETFs when making investment decisions, but they are unaware of the hidden backdoor techniques used by Wall Street to take advantage of ETF investors. In this video, I will give you a short intro to what ETFs are and how they are structured. In the second part of the video, I'm going to introduce you to the concept of front running, and in the last segment of the video I will share with you how Wall Street uses front running to defraud ETF investors. If you like the type of content that I provide, subscribe to this channel and like this video, and also hit the notification bell so that you don't miss any of my future videos. Part 1: Introduction to ETFs. Exchange traded funds, or ETFs for short, are investment vehicles created to track a specific list of securities. Here is how ETFs are created. An investment firm such as Vanguard initiates a fund by purchasing the securities listed on an index such as the S&P 500. Then Vanguard splits the fund into smaller chunks, so to speak, and starts to sell them to investors on stock exchanges. In other words, when you are buying a share of an ETF, you are buying a small portion of the fund that Vanguard has created using the process I just explained. In this scenario, Vanguard will take care of managing the fund and ensuring that it tracks the index in exchange for a management fee that they charge annually. One of the main responsibilities of the financial institution which creates the ETF is to ensure that it tracks its corresponding index properly. This applies to the composition of stocks included in the index, as well as their relative weight as percentage of the overall fund. When new stocks are added to the index, the financial institution in charge of the ETF has to buy the stocks and add them to the ETF's assets. Alternatively, when stocks are dropped from the index, the financial institution has to remove them from the ETF's assets by selling them. Part 2: Front running. To set the stage for explaining how Wall Street defrauds ETF investors, I should introduce the concept of front running. Front running, as the name implies, occurs when a broker or trader attempts to insert and execute a trade before another order. The goal of front running is to gain an economic advantage over other traders in the market. We know that when large purchase orders are executed in the stock market, they tend to increase the price of their corresponding stock. Since brokers have access to order flows in the market, they can leverage this information to benefit from the subsequent price moves. For example, after getting a large order from a client to buy, say, 1 million shares of a certain stock, a broker can technically insert an order for the same stock for their own account ahead of executing the client's request. The newly inserted order makes the stock price rise sharply before the execution of the client's bulk order, which creates a huge instant profit for the broker. The process of front running is shown in this picture for buy orders. A similar process occurs for the sell orders. In step 1, a client places a large order, say from a financial institution managing your ETF. When the broker identifies this order, they will place a buy order for their own book for the same stock before executing the client's order and hence the name front running. This order is executed at the current stock price, which is $100, and hence it impacts the market, sending the stock price higher to say $101. In step 3, the broker executes the client's order, which occurs at the higher price of $101 instead of $100. Then in step 4, the broker sells the shares which were purchased in step 2 for a profit, pocketing the $1 difference. Part 3. How does front running impact ETFs? Since ETFs need to track certain indexes, they need to mirror the changes to their underlying index. Therefore, whenever a new stock is added to the index, the ETF needs to purchase enough shares of that stock to be incorporated in their assets. The opposite is true when a stock is removed from the index. These changes to indexes provide perfect opportunities for Wall Street brokers to front-run orders. For example, when a stock is about to be enlisted in an index, Wall Street brokers know that the financial institutions responsible for managing the ETFs tracking that particular index are going to have to buy a large quantity of that particular stock. Using this information, Wall Street brokers rush to front-run orders which are eventually going to be placed by the financial institutions managing ETFs. Note that the financial institutions managing ETFs have no choice because by law they are obligated to track the indexes. By front-running these orders, Wall Street brokers make huge amount of money anytime a stock is enlisted or delisted from various indexes. According to some statistics, the average cost of front-running by Wall Street brokers is 0.28% annually, meaning that for every $100 that you invest in an ETF, Wall Street brokers are going to take away 28 cents from your investment every year. It might not sound like a big deal, but this is actually a large number compared to the management fees of these ETFs. For instance, some efficient ETFs such as Vanguard's ETF tracking the S&P 500 index have management fees of only 0.03%. So the amount of money taken away from you due to the front running by Wall Street brokers is 9 times higher than the amount of money that you pay in management fees. This is a crazy amount of money that is being stolen from ETF investors. However, many people are not familiar with the details of how financial markets operate, and that is why Wall Street brokers can get away with this kind of financial robbery. I hope that you liked this video. If you have any recommendation or suggestion, please add them in the comment section below. Don't forget to like this video and subscribe to this channel, and also hit the notification bell so that you don't miss any of my future videos. Thank you and take care.